Well, absolutely flat. That's how this last trading hour is actually kickstarting. While, of course, there's Apollo Hospitals, BEL, Geo Financials, IndusInd Bank. And to be fair, they were movers in trade yesterday as well. But the one which is actually picking up weight and perhaps could reflect on the way the indexes close is Reliance Industries. Look at the intraday graph. That stock is sitting at the highest point in the day right now. There was, of course, a brokerage note as well on Reliance. Nuvama initiated with a buy target raise now to 1801. The stock currently at 1528 as we speak. The company, of course, has commenced selling modules externally now, and they're looking at a 3,800 crore rupee addition. That's a 6% addition to their FY26 PAT. So that's one stock, of course, which is holding out. And then, of course, there is the entire paints pack. Asian Paints, Berger, Birla Opus, all in focus, given that JSW Paints is now working on being one of the top players in the Indian paints industry. That's the word coming in from none other than Parth Jindal, MD of JSW Paints. He's also sharing their revenue and growth targets in a briefing post the AkzoNobel acquisition. In fact, let's hear out that bite.
I am sure that JSW Paints and Dulux and AkzoNobel together, we could really challenge for the top two in the Indian paint industry. So at JSW, we have always said that in whichever industry we enter, we would like to remain in the top three and we would like to enter that. Like I mentioned, JSW Paints is very strong in the value and mass premium segments, and Dulux, as the name suggests, is one of the market leaders in the premiums. So when we combine the two, we're very, very confident, and that will allow us to significantly expand our decorative revenues from a combined total of about 3,700 crores once we come together to about 6,000 crores. Should be very, very quick and very straightforward. We intend on keeping ANIL as a listed entity.
Okay, let me welcome on board Devin Choksi as well and figure out what he's making of the market and, of course, what's happening within the paint sector right now. Devin, hi, afternoon. Good to have you on the show. And let's start off with what Parth Jindal is saying, that they're aiming to become the top three players within the paint industry. We saw the shake-off that Asian Paints went through when Birla actually got into the market. How do you think the sector is going to shape up? And from an investment perspective, what are the best bets right now?
Yeah, good afternoon. Well, I think most importantly, if you see the entire home decor segment and see the paint as part of it, then possibly I think somebody is making a good amount of effort in making this particular inroads into the paint business. AkzoNobel probably standing at about number 4 position in the home decor segment or home paint segment, and at number 2 position in industrial segment. I feel that I think it's a good proposition as far as I think the acquisition is concerned for JSW. On one side, you are getting the ready-to-use infrastructure facilities, including the distribution points for retailing segment. And at the same time, I think having the industrial customers whose acceptance for the technology, the product itself, is also giving an advantage to them. Cash generative business, I think, of course, at the same time. However, the bigger challenges are going to be in form of acquiring the larger part of the market share. And that's where I think we are seeing some more consolidations happening in this particular space. Up till now, I think most of the paint manufacturers have independently grown this business. They have actually, I think, dealt with unorganized players and made this entire business more organized. Now, probably, I think within the organized players also, I think the consolidation is probably being seen. And in that situation, I think we are likely to see, at least for near term, some pressure on the margin. They will not be in a position to pass on the cost because higher amount of distribution margins being paid by some of the competitors at this point of time, including Birla. So from that perspective, I think the margins may remain under pressure. But overall, the proposition remains comfortable for companies like Asian Paint because they are well integrated into the manufacturing space from back end to the front end. So we feel that, yes, I think challenges will be there. Valuations are adequately placed at this point of time. So upside is limited at this point of time. Maybe some amount of margin improvement can be expected because of the lower crude oil prices and the relatively lower price for the derivatives of crude oil. And that's where probably I think the market may see some amount of move, but not major in some of the paint company stocks.
but also help us understand then how do you see the market share picture shaping up? Because as of now, if I see, then yes, Asian Paints, Berger and Kansai, these are the top three spots when it comes to the leaders in the paint sector. But Birla Opus as well as JSW Paints now, they will have a tough competition with 7% market share each right now. And Birla Opus is very aggressive on the point that they want to have it in a double-digit number when it comes to market share. If they are on the winning side, then who could be at the losing end? How do you see the market share shaping up?
For how long I think they will be putting this kind of aggressiveness as far as acquiring the market share is a concern at the cost is important to be seen, because I think this business is unlikely to generate for Birla, as we understand, a significantly large amount of profit. I think there might be small profit, I think, at some point of time, given the kind of push that they are making. But the large profit on capital employed, I think, is not likely to be immediate reality for this kind of players, I think, to begin with. Maybe you will have to see this business for the next 5-year period, in which probably we will see relatively better outcome. At this point of time, we feel that the leaders will probably be able to maintain their terms with the distributors. Like Asian Paint, I think they'll be able to maintain the terms with the distributors. Of course, I think the price hike scenario, which earlier they used to have 2 to 3% hike in a year, I think that part of the scenario, at least at this point of time, unlikely to immediately emerge. But we'll have to wait and see. This particular stocks or the companies within the listed space, I don't think that immediate we will see a major upside. Maybe small upsides possible in Asian Paints case at this point of time.
And do you think in terms of valuation also they then stick with the leader? Would it be Asian Paints or would you look at Berger or any other?
No, Asian Paint clearly remains, I think, favorite among the lot, largely because of the fact, as I mentioned, I think a complete integrated story that one is experiencing. And that's where probably I feel that the valuation would probably be more favorably paid to companies like Asian Paint, because all said and done, I think they are in the profits as compared to the newer entrants who are aggressively pushing themselves.
That's about the paint sector. Well, of course, taking a stock check, yes, Asian Paints has been buzzing in the past 2 to 3 days. What we are seeing is that Asian Paints as a stock is doing pretty well, and especially after that announcement of AkzoNobel and JSW Steel kicking in. And some of these brokerages are also highlighting the fact, case in point being ICICI Securities, because for today they have come out with an upgrade on Asian Paints, and Berger Paints upgraded the rating to an add from a reduced rating earlier. They are highlighting that the margins are closer to bottom and the valuations multiples are below the mean PE, and with steep competition pressures as well as decline in the revenues and margin contraction, the valuation multiples of both of these companies are below the mean PE, and hence they are liking the stock. Devin, we have discussed paint with you, but help us understand what is looking interesting to you in the markets right now. Apart from paints, what's your take on the other sectors? Because a lot of sector churning underway, and off late, even Reliance is lending support to the benchmark indices.
Yes, I think important, because Reliance would passively, I think, pull the market to the newer levels, largely because of the fact that the renewable segment is now basically going to see the reality as far as I think the commercial production is concerned, phase by phase manner, maybe to begin with in the solar panels and in the battery systems, etc., and gradually going into the green hydrogen as well. So I think that is one area which is likely to unfold the valuation. I wouldn't be surprised. I think this particular valuation could be pegged somewhere around 250 to 300 rupees per share. As far as the new business of renewable is concerned. Should that happen, then possibility of around 15 to 20% upside in the current stock price of Reliance is not ruled out. So it in itself, I think, being a heavyweight in the market, it can pull the other stocks also along with in the index weight arrangement kind of a program. Other than that, we believe that the larger opportunity and the contraband could be in the commodities, the metal, the ferrous, non-ferrous, both included, along with the chemical commodities, could be the next line of action that one could possibly see. Largely because of the fact that I think the crude oil prices are going to remain soft, and I think the input cost, in case of commodity, metal commodity, I think the energy cost, and in case of the chemical commodity, I think the derivatives of crude oil, I think that cost remains under control when they are talking about increasing the margin, which in last 3, 4 years one has not seen. And that could possibly re-rate some of these companies. At the same time, demand scenario appears to be, I think, relatively more stable and likely to be more stable going forward as well. So from a perspective of looking at growth, I think this particular space looks interesting, both metal commodity as well as chemical commodity in coming times.
Devin, hold on to that thought. Lots more to talk about with you. For now, we're going to take a very quick break. Reliance, of course, sitting at the day's highs, along with Geo Financial. So that, the large cap support definitely is there. But let's see whether it sustains or not. Because at an index level, we're still pretty quiet, just holding on above the 25,600 print for the Nifty futures.
Welcome back to closing trades right here on ET Now. And yes, of course, markets are range bound in today's trading session, but Nifty is trying to hold on to that level of 25,500. When it comes to Nifty Bank, 121 points of gain is what we are seeing. A good recovery from the day's lowest point, at least for the banking index. But indeed, a lot of stocks that are already in focus today. And case in point being the auto counter specifically, because let's just highlight some of the outperformers in the June auto sales data that we have. And it's Eicher Motors Royal Enfield that has surprised positively. The numbers are close to 89,000 units versus the street estimate of 84,000 units, and hence a jump on the stock price as well is what we are seeing. Ashok Leyland, decent surprise coming in, 15,333 units is what the company has clocked in versus the street estimate of 14,900 units. And along with that, what we're getting to see is decent numbers from Tata Motors commercial vehicle segment, but disappointment on the passenger vehicle side is what we are witnessing. So let's deep dive more into that. And Devin, just wanted to have your take on Eicher Motors Royal Enfield, because of late we are seeing that the numbers on a month-on-month basis, they are anywhere above that 85,000 mark. And the company is very confident that for the next 2 years they are going to be launching newer products. Help us understand that. How do you see Eicher Motors to perform within the two-wheeler basket? Because there's always a debate of this stock trading at a higher valuation.
Yes, I think justifiably so, because on a lower numbers, I think they produce higher turnover and the profits. So from a perspective of looking at, I think the investors, they find that the Eicher strategy is working fine. Probably, I think the new range of products which they are bringing in, their premium range of products. So comparatively, they are not competing with the masses out there in the marketplace. Gives a good amount of handle to this particular company, because I think that's where probably they're generating the business as well. Whether I think one is immediately getting opportunity to buy into this stock given the kind of valuation, I'm not too sure at this point of time. But I do believe that I think they have a moat in place in form of new launches, and those launches are likely to continue the kind of a growth that they have been experiencing in the marketplace. So Bajaj and Eicher, both of them are in the premiumization of their product portfolio, are gaining the maximum amount of market attention vis-a-vis their peers in the two-wheeler industry.
Okay, let's throw focus on what's happening within the IPO market. In post demerger, Raymond Realty listed on the bourses today at a discount of 4%. In fact, Sharad is here with more details on the listing and the way ahead for the company now.
In focus is Raymond Realty, and a muted listing coming in, stock down 5% from its listing price and selling pressures seen in the counter. Interestingly, the realty arm has been demerged and the shareholding ratio was 1:1 for the shareholders. Now, traders suggest that the selling pressure is coming from the HNI segment. Interestingly, the street was expecting, as per SBI Securities, assigning a base case fair value of 1,148 rupees per share, assuming a 10% year-on-year EBITDA growth in FY26 and a 13 times EV EBITDA multiple. But going ahead, for Raymond Realty, land monetization is a key trigger, especially in the Thane region of Mumbai metropolitan region. And also the revenues worth 9,000 crore from these projects would be coming in. But overall, for the shareholders, after the demerger of the units of Raymond, has not been as much as profitable. And we did a number crunching, especially from the listing price, and we saw the falls coming in. For Raymond Lifestyle, there has been an erosion of almost 57% of the total market cap, while Raymond Realty is also listed today on the bourses, is down 5%. On the other hand, of course, the holding company Raymond, that's up almost 7% in the day's trade.
Thank you so much, Sharath, for getting us all those details. On the first day itself, it's Raymond Realty that is down actually 5%. And one of the other listing by the group is Raymond Lifestyle, which has corrected 57% from those listing prices. So indeed, that's about the group of stocks that got listed post the demerger. But with this, let's move on and let's also welcome Shivangi Sharda of Motilal Oswal joining us on the show right now. Hi Shivangi, good afternoon and good to speak with you. Firstly, help us with your take on the benchmark indices. Quite a range-bound trading session, but at least for the Nifty Bank, we can spot a decent recovery from the lows.
Absolutely. Very good afternoon, Shrishti. Thank you for having me. So we've seen that the indices have, taken a bit of a pause after the good rally of the last week that we've seen. But the good part is that we are holding at the support levels. And today, despite the negative opening, we've seen that there has been a roller coaster ride, much of a tug of war between the bulls and bears. But overshadowing were the bulls. So overall, we are recommending buy on decline to continue here for the index. Now, looking at the levels, 25,500 will be a major make or break zone over here, which will, decide the next leg of rally. But overall, there are good put writers making a base at the lower levels as well. So support-based buying will be intact for the next targets of around 25,850 marks and then positionally 26,000 levels. Now, rollover for the July series from the June one has been quite positive. Even seasonality-wise, we've seen that July month has, recorded the highest on an average returns in the last 10 years. Over the last, 10 years, July has been one month which has always closed in green. So overall, we are expecting this positive momentum and the bulls party to continue. Now, support can be seen at 25,250 marks. Talking about Bank Nifty, of course, this index has been outperforming, especially the smaller banking names from the last three trading sessions. Overall, there has been some sort of consolidation and lackluster move from the heavyweights, but the entire pack is, kind of supporting and helping this entire index. It has surpassed its previous hurdle and trading in a new lifetime high territory zones as well. So we're looking at 58,000 as the next, step for Bank Nifty with a support of 57,000 zones with special focus on the smaller names.
Absolutely. Talking about July seasonality, Ashesha has been digging out the previous July month's data and she joins in with her analysis.
Well, yes, after a solid 3% uptick that we saw on the Nifty 50 level in the month of June, all eyes are on the month of July. But we were going through the data for the last 3 years and at the index level and for the broader markets indices, we have seen solid returns for the month of July over the last 3 years. First up, let's put the spotlight on Nifty. In 2024, it rose nearly 4%. We saw an uptick of nearly 3% in the year earlier and about 8.5% uptick in calendar year 2022. In the month of July. Shifting focus to the broader markets then, and the mid-cap index has also risen anywhere between 5 to 12% in the month of July over the last 3 years. So that's the kind of uptick that we've seen across indices, across broader markets in the month of July historically. Let's also talk about the small cap index. That one rose by about 4.5% in the month of July last year, an uptick of 8% in July 2023. And an uptick of about 8.5% in July 2022. So historically, when we look at the data for the month of July over the last 3 years, it has been a solid month. And after the solid uptick that we have seen in the month of June, looks like the momentum is likely to continue this month as well.
All right, thank you so much, Ashesha, for giving us all those details. So for the past 3 years data do suggest that July month has turned out to be a good month for the bulls out there. Not just its Nifty as well as the small and the mid end of the market has done pretty well when it comes to the last 3 years data. But with this, let me also welcome Akshay Bhagwat on the show right now. Hi, Akshay. Good afternoon and good to be speaking with you. So, Akshay, barring index, help us understand that for the month of July, which sectors do you believe can do well? Because for now, sort of a range bound trading session, at least for the day, but the banking index, select banking counters are doing well, select chemical counters are inching higher. Give us your sense that sectorally, how are you planning to place your bets?
Yeah, so sectorally, if you look at it's the bank index which is strong, but again in bank index you have to dissect the PSU banking space because if you were to look at the data points and the chart setups of the majority of the PSU space or the banks rather, they are in a very sweet spot and on the verge of breakout. So if you were to name a few stocks, State Bank has been trading in a range and is almost on the verge of the breakout of the 820, 825 range. I'm hopeful that this breakout will be seen in the month of July, and if it happens, then you should be seeing targets of 850 in the month of July. Also, Canara Bank has been on a rally in the prior month, and I believe the carry forward momentum should see this stock heading for its swing high of 120. Another stock is Bank of Baroda, also again from the PSU banking space, which I think is showing good signs of recovery in the last five sessions, and in all likelihood, this too should attempt a breakout above the levels of 260, and if it does, 275 should be in the making. So PSU space in the banking sector is one space I am betting on for the month of July.
Okay, that's the take coming in right now on some of those technical analysis and of course what's actually holding out from within the market segment. But David, just wanted to get your thoughts in on real estate as a space right now. My colleague just highlighted as to how it's been a muted listing for Raymond Realty. But how are you analyzing the realty pack right now? And would you say that, stick by with the premium players?
So I think within the category of low cost housing to the premium providers of the housing and the luxurious housing, our take would be that the companies which are into the luxurious housing, I think could possibly see a larger part of the growth in the business. Because on the same land parcel, when you, I think, fetch better realization and in turn make, I think, higher amount of ROE, ROC, I think you are likely to get relatively better valuation compared to, I think, the categories 2 and 3, that is the premium, and the lower end, that is low cost housing. So I think we would remain distinctly bullish about that prospect. And I think this is the journey which is likely to continue for around 8 to 10 years from now. We believe that I think even city like Mumbai alone, I think is having a potential to have at least 30,000 buildings going under redevelopment, and every development is basically being seen as a luxury part of the development in the city of Mumbai. So certainly, I think we are likely to see some of the players who are focusing on the luxury segment of the real estate getting little better attention in the market, and the appreciation also in the stock price could be slightly better compared to the other two.
That's the take coming in on the realty space. All right, Devin, so good having you on the show today. Thank you so much for taking the time out and speaking with us. But with this, viewers, time now once again to slip into a very short break in this edition of Closing Trade. But as we do that, hear out from our experts on Apollo Hospitals demerger plan, how it will benefit the shareholders and unlock the value. Let's hear out Tapan's Doshi take on this.
If you know this digital business, pharmacy business, retail pharmacy business was making losses, and that was actually bringing the profitability of Apollo Hospital overall down. Now, as it is going to get demerger, value unlocking will happen. If you see the current EBITDA of Apollo Hospital is around 14 to 16%, which may go to 20% post this demerger. Again, the valuation perspective, even if I see, I think it will go to about maybe 15-20% higher when the demerger normally happens. So Apollo Hospital is also doing very well. If you see their expansion plan is almost, you can say 7,000 to 8,000 crore of capex is there. 3,000-4,000 more beds they are going to bring. Even if you say average revenue per bed is increasing of almost 6 to 7%. So all this combined, I think this is better for the company, and both on the terms of ROCE or ROA or even margin point of view, I think it will benefit it. So one should hold on, and I think good times are ahead for Apollo, at least looking at that deal I can feel.
Welcome back to Closing Trades right here on ET Now. And today we spoke with Gautam Shah, who is the founder of Goldilocks Global Research. And he says that banks, IT and Reliance comeback bodes well for the Nifty. Let's go across and listen into his take on the markets.
I think the fact that there are too many things firing in for the Nifty. I mean, we saw the banks do so well. We saw Reliance making a comeback. We saw IT coming back very strongly from the recent lows. So that just helps the overall market because there are too many, factors and too many sectors which are batting for the Nifty. The Reliance comeback is obviously positive. We've been very bullish on for the last 3 to 6 months is financial services. And I think it's going to go on to do bigger things. Valuations are comfortable, fundamentals are excellent, earnings visibility is there, and smart money action seems to be there, and the charts are in great shape. So I think financial services is really the place to be in. And if you have to participate in this market rally, you need to be in financial services, housing finance companies, insurance companies, NBFCs, banks for the next 3 to 6 months.
Okay, financials, Reliance, that's what Gautam Shah is currently betting on. But let me also welcome on board Anshul Sehgal. Anshul, hi, afternoon. Good to be speaking with you. Do you also think, Anshul, that it's going to be Reliance and more of financials to take us to the next leap and perhaps an all-time high, given that at an index level, we're only about 2% away from that mark?
Afternoon, Aisha. Always a pleasure to speak with you. Yes, banks, if you it's important to give a little bit of a context on banks in particular. And, these opportunities play out in waves. So if you go back to the year 2012-13, we were at the cusp of a cycle where corporate banks were starting to face trouble because NPAs were starting to rise. And that situation carried on till about 2018 and 19. And we saw what happened in corporate banks. A bank like an ICICI Bank traded at 0.7, 0.8 times book. PSU banks, many of them traded at 0.2, 0.3 times book. And it is at that time that the NPA cycle peaked off, and as a result, profitability bottomed. And when that cycle reversed, the wave also reversed in favor of the banking sector, particularly the corporate banking sector. And we saw what happened. Many of the PSU banks went up 6, 7 times, 8 times as a result of that. Of course, in the last 1.5 years, there's been a consolidation here. And in the private sector banks, there has been a consolidation over the last 3-4 years, which is now starting to break out, particularly the retail-oriented private sector banks. What we witness now is a situation where NBFCs in particular had been kind of tempered because of action at the regulatory front. And if you look at the slew of news items and also regulator initiatives, we are quite clear that the regulator wants to start the NBFCs a breakout in a sense, and they want to really see NBFCs go out and lend. We anticipate that the next wave will be in NBFCs, and as your previous speaker rightly mentioned, housing finance, NBFCs, general lenders, all of those should be quite strong as we move ahead in this sort of wave.
I guess we'll get a lot more food for thought. The cabinet briefing is currently on, and let's cut across to Ashwini Vaishnaw speaking.
आत्मनिर्भर बनने के लिए जो टेक्नोलॉजीज चाहिए वो सारे सेक्टर्स को इसमें इंक्लूड किया गया है. इसका स्ट्रक्चर इस तरह से होगा. गवर्नमेंट ऑफ इंडिया ने एएनआरएफ को फंड्स दिए, 1 लाख करोड़ रुपीस के फंड्स दिए. ये एक 50-year इंटरेस्ट फ्री लोन है. एएनआरएफ का जो स्पेशल पर्पस फंड बनेगा वो सेकेंड लेवल फंड मैनेजर्स को कंसेशनल रेट पे फंडिंग करेंगे. सेकेंड लेवल फंड मैनेजर्स में बहुत सारे हमारे जो अभी एग्जिस्टिंग फंड मैनेजर्स हैं और इसके अलावा भी नए फंड मैनेजर्स जो डेवलप करेंगे, उन सबके पास ये फंड जाएगा. वो लोग नीचे प्रोजेक्ट को असेस करके, अप्रेज करके, उसकी वेटिंग करके, प्रोजेक्ट बाय प्रोजेक्ट सिलेक्शन करके आगे फंडिंग करेंगे. ये जो फंडिंग होगी वो सपोर्ट इक्विटी और डेट दोनों तरह का होगा। जैसे वीसी फंडिंग होती है, वेंचर कैपिटल फंडिंग होती है, वैसे ही इसमें वीसी और डेट का कॉम्बिनेशन रहेगा। सारे सेक्टर्स जो स्पेसिफिकली डिफाइंड है उन सेक्टर्स में ये फंडिंग जाएगी। बहुत अच्छा स्ट्रक्चर है ये, और ऐसा स्ट्रक्चर दुनिया में बहुत सारी जगह सक्सेसफुल हुआ है, और इंडस्ट्री के साथ डिटेल डिस्कशन होने के बाद में ये स्ट्रक्चर बना है। गवर्नेंस के लिए बहुत एक ट्रांसपेरेंट मैकेनिज्म बनाया जाएगा। एक तो एएनआरएफ की गवर्निंग बॉडी रहेगी, उसकी एग्जीक्यूटिव काउंसिल रहेगी, ये ब्रॉड पॉलिसी डिसीजंस के लिए। उसके बाद में डे टू डे जो डिसीजंस होंगे वो एम्पावर्ड ग्रुप ऑफ सेक्रेटरीज, इसमें जिस सेक्टर का प्रोजेक्ट है उस सेक्टर के सेक्रेटरी भी शामिल होंगे। मान लो एनर्जी ट्रांजिशन का क्लाइमेट एक्शन से रिलेटेड है तो उसमें एमएनआरई के सेक्रेटरी शामिल होंगे। मान लो एआई से रिलेटेड है तो मेटी के सेक्रेटरी भी शामिल होंगे। मान लो बायो फार्मा है तो उसमें हेल्थ सेक्रेटरी और फार्मास्यूटिकल के सेक्रेटरी भी उसमें रहेंगे। नीचे इन्वेस्टमेंट कमेटी बनेगी, जो कि जिस तरह से वेंचर कैपिटल इंडस्ट्री में इन्वेस्टमेंट कमेटी काम करती है प्रोजेक्ट को अप्रेज करने के लिए, वो उसी मेथड से काम करेगी। दिस इज अ वेरी गुड, वेरी ट्रांसपेरेंट एंड अ वेरी डिटेल्ड स्ट्रक्चर which is based on the consultations with industry, consultations with many other governments who have done similar structures in the past.
Okay, very interesting announcements coming in there, that there will be an ELI or employment linked incentive scheme which the government has just announced, worth about 1 lakh crore rupees. And there is a nod for research development as well as an innovation scheme. But I think from a market perspective is that the manufacturing sector is going to be the one which is going to be in focus under the ELI scheme, which is an employment linked incentive scheme that's just got announced. The scheme, of course, is going to be applicable to all sectors wherein the focus is going to be manufacturing. And Anshul, we've seen that, the market has truly recognized the theme of manufacturing ever since the government did begin talking about an Atmanirbhar Bharat. Within manufacturing, from an investment perspective, where is it that you still scout for opportunities?
Aisha, in manufacturing, we have seen a dearth of capacity creation over the last, say, the previous decade, that is between 2010 to 2020. There is a lot of catch up to happen. Also, there is that China plus one theme which is likely to play out going forward. As a result, the world is going to move its manufacturing to India in great measure. Take both these things together, exporters out of India of manufactured goods, as also within the country, whether it is electronics, it is chemicals, it is even capital goods, which will be a play on manufacturing. All of these segments in the market will see significant tailwinds. Just to give you an anecdote, I was speaking to a manpower management company recently, and they mentioned to me that about a year back, the total manpower capacity that they had for manufacturing was about 5,000. That number has gone up to 75,000 today. And in the next 2 years, they anticipate that number will go to 1 million. So that is the kind of tailwind that manufacturing is witnessing already, and it is likely to witness as we move ahead. This is the sunrise sector of the future. This is what IT was in the 2000s, and tremendous amounts of wealth will be created in this segment.
Stocks that come to your mind, or companies wherein you see immense growth visibility?
Take auto components. Auto components, there is going to be tremendous visibility, and also there are auto OEMs also, they will witness tremendous tailwinds. Aside from this, take bearing companies, take chemical, particular segments within chemicals, say fluorination chemistry, that's where you'll see significant tailwinds. So many of these segments, also CDMO is a space where we will see tremendous tailwinds. The market is as big as $150 billion. India does only $3 to $4 billion of that. Most of that manufacturing happens in China. Say 2 or 3% of that move away from China and towards India, and we will see a doubling of the market. So these are some segments where we will see tremendous opportunity, and we are already seeing that. Speak to companies, and they'll tell you that many of these companies that they'll double revenues in the next 3 years. So much is happening in this space.
Lot much is happening within the sectors that Anshul just highlighted, case in point being the auto ancillary companies. And well, of course, today we have seen select auto companies doing well, case in point being Gabriel India, after the company announced a restructuring of their businesses, wherein some of the other entities will now get merged into the listed entity of Gabriel India, now expanding the product portfolio from just one product to multiple products coming in for Gabriel India. And the analysts believe that from day one itself, this will be an EPS accretive restructuring. Along with that, the EPS accretion can be as high as 41%. So indeed, the stock is already locked at a 20% upper circuit. But Shivangi, within the auto ancillary space, any stock that is looking good to you, because the OEMs are absolutely doing nothing of late. But yes, a lot of action within the auto ancillary space. Any stock that comes on the top of your mind?
Absolutely, Shrishti. When I talk about auto space, there has been some bit of revival over here. But what major trends are suggesting that there is still a lot of unwinding left to be happen in the heavyweights, which is why the overall sector is not really changing gears for the higher zones. So I would suggest a little wait and watch over here. Nifty Auto has been consolidating and trying to move, but lack of follow-up is clearly missing. Lack of follow-up is clearly seen in this entire sector, which is kind of making it a little, wait and pause for the moment. So I would suggest we could shift focus to banking and non-banking stocks, non-banking financial stocks for that matter.
Okay, that's the take coming in right now. And where is it that you're finding opportunities? And it seems to be a consensus call. It's NBFCs and banks. That's the way really to go. Let's take a very quick break. When we come back, of course, we're going to be taking the closing trading ideas as well. Less than 15 minutes to go. Let's see how we pan out for the day.
And we have a breaking news coming in on India-US trade talks, wherein the India trade team has extended its stay by one more day. Let's go across to my colleague Sumita, who is here with more details on this one. Sumita, tell us the latest that you're picking up.
Absolutely, Srishti. This trade team that's led by India's chief negotiator, 6th and 27th, they extended their stay beyond that time period. And now we're given to understand from government sources that the trade team, which is in the United States in Washington to negotiate with the United States trade team and the Commerce Ministry officials, well, that has extended its stay by one more day. In fact, we're also given to understand from government sources that India-US talks, they remain deadlocked as New Delhi is resisting lowering of tariffs with respect to its very, very sensitive agri sector, dairy sector and GM crops, genetically modified crops. Remember, government sources last week also indicated, and they told ET Now exclusively, that that is one segment that has not been touched before with respect to any deals that we've struck with other countries. So, of course, India maintaining a firm stance with respect to this particular sector. Meanwhile, India is insisting on a competitive edge that it needs to have for its own domestic industry. It is also asking for concessions related to labor-intensive sectors that includes handicrafts, gems and jewelry and related sectors. And in fact, they are yet to come to an agreement so far as an interim trade deal is concerned. So that's the latest that we're picking up as far as negotiations between the two sides are concerned.
Right, we'll leave it at that. Sumita, thanks for all those details. Anshul, wanted to get your thoughts in. I know that, there is that fast approaching tariff deadline with the US and the extension of 3 months comes to a close. But how critical do you think, from an India standpoint, would be the tariff negotiations for the market rally to continue? Would it have any bearing to begin with?
Aisha, this has various facets to it. One is, of course, the immediate benefit in terms of earnings for Indian companies, and that will happen sector by sector. For instance, in textiles, there can be significant benefits as a result of the trade deal. But in capital goods, unlikely, because there isn't really much that that we can trade on that aspect. So there will be a sector by sector benefit that India will see because of the trade deal. But there is another layer to the trade deal, which is that there is capital flows that happen because of geopolitical moves. And if the trade deal, by and large, is seen as beneficial to India and adversarial towards China, then clearly that will be a signal that even flows should move towards India to some extent at the cost of China. So on flows, this can be a big signal. And by and large, India is a very small I mean, on India's GDP, the trade with America is very small, and there is only room for increase over there. So, in our judgment, the tariffs and the deal, the trade deal, are likely to be beneficial for the country by and large. That's the way we view this negotiation at the moment.
Shivangi, let's get in your stock ideas as well. Less than 10 minutes to go before we wind up.
Absolutely. So talking about the stock ideas, we are seeing that some of the smaller banking names and the NBFC space are obviously outperforming in the entire broader market. My preferred pick would be Federal Bank, which has shown buying interest from the last around about 18 weeks. Support-based buying has been quite strong here, but the consolidation breakout in today's session is confirming the uptrend. It has surpassed its previous hurdle zones of 215 levels and very comfortably trading and closing above the same. Now there has been interesting data points here, as in the rollover has been quite positive with long build up, and it has been holding well above its key exponential moving averages as well. So Federal Bank is definitely a one on the radar with a target of 227 and a stop loss of 214 levels. And the second pick on my radar would be Loris Labs. We've seen that this entire space has been doing fairly stable and well in the last 2 months. And recently, Loris Labs has given a breakout on the monthly frame with follow-up buying seen here. From the last two trading sessions, volumes have been quite remarkable over here, and this stock is one which has been resilient despite the market weakness and volatility in between as well. So definitely a strong name with looking good for a potential targets of 770 levels with a stop loss of 730.
So those are the top bets coming in from Shivangi. Let's watch out for Federal Bank as well as Loris Lab that Shivangi just highlighted. But Anshul, just wanted to have your take on a stock of BEL, because of late we have seen, especially for the past 2 months, there are so many new order inflows coming in for BEL. Today the stock is at an all-time high. But Anshul, the other concern is with respect to the valuations and the kind of run-up that these stocks have already seen. But any take specifically on BEL, and how do you see the whole defense pack right now? Are you also concerned with respect to the valuations?
Hi, Srishti. Just as an aside, in 2014, January, I tweeted saying that defense and gold should be seen as a strategic hedge to any portfolio. And there should be some allocation in both these segments in all portfolios because of geopolitical tensions that were really simmering at that time. And really, the crystal ball gaze has worked very well because it is these two segments which have really outperformed the markets since then. Now we are at a stage where most of the valuation upside is in the price, and one has to be kind of cautious at this time. The easy money that was on the table around that time has mostly been made. Many of these defense companies trade at 40, 50, 60 times price to earnings. And that really builds in future growth potential for these companies. The shipyards, for instance, they are trading at astronomical valuations. In our judgment, this is not a time to be as ebullient as you could have been, say, a year and a half back. But still, some allocation to defense should be in the portfolios because this is an unnerving time. We are really going to be in a period of nervousness as regards geopolitics over the next 2-3 years, and this is one segment which will act as a hedge to the portfolio. So valuations tight, but on a stock specific basis, some opportunities still remain in this space.
And what's your preferred list of names there, Anshul?
Some of the companies, Aisha, will be names which have conglomerate nature. Some companies which have automobile, auto component, segments also within the business, as also a defense component. And at some point in the future, these businesses will be demerged. And so valuations at the moment are building in the auto component weakness, not so much the defense strength. And that should really help going forward. And then there are certain smaller companies where the base is so small that the upside in earnings, particularly on revenues, can be as much as 50% CAGR for the ensuing future. And if that does play out, then valuations really at this time don't look too expensive. But as I said, these will be stock specific opportunities, not really a sector specific approach. The sector by and large is trading at full valuations.
All right, Anshul, with this, would like to thank you for taking the time out and speaking with us this afternoon. And thank you so much, Shivangi, as well, for joining us today onto the show. So time now to wrap this edition of Closing Trades, and as we head towards the closing of the market today, what we are seeing is it's been a decent day for the markets overall. Range-bound trading session is what we will call it when it comes to Nifty 50, while Nifty Bank did see a bit of a recovery from its lowest point, ending the day with over 100 points of gain as we speak right now. What did really well was Apollo Hospitals on the back of that demerger announcement and the possible listing of their pharmacy business and the digital business, of course, in the next 18 to 21 months, and the stock seemed to be higher by over 3.5%. BEL, another counter, seemed to be hitting its record high levels in today's trading session on the back of so many order inflows, and yet again over 500 crores of fresh order win coming in for this particular counter. Reliance was the third top gainer on the Nifty 50 side after that upgrade coming in from Nuvama, and SBI Life too, like the life insurance counters have been doing well, was the fourth top gainer in the Nifty 50. Select paint counters have been doing well, but within the auto pack, it's Eicher Motors, Ashok Leyland, on the back of good set of numbers versus the street estimates. These stocks ended the day in the green, and even JSW Steel, Kotak Mahindra Bank, these were some of your other gainers. On the flip side, Axis Bank, Nestle, Shriram Finance, Trent, these were the counters that were the laggards on the Nifty 50 side. But let's also have a look at the breadth of the market. It's quite an even Steven when it comes to the advances and decline on NSE, and so is the case with BSE, while the mid and the small end of the market was also seen to be consolidating for the major part of the day. India VIX ended the day with a cut of over 2% of a decline coming in. So that's how we shut shop. It's been a range-bound trading session for the markets, but a lot of these stock movers were indeed at play, and especially select financial, select chemical counters, they were seen to be doing well. But with this, it's a goodbye from me and the entire team who put this show together. Thanks so much for tuning in.